The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. As always, we like to meet here at this time.
The following takes place between 2 p.m. and 3 p.m.
And, of course, the FOMC meeting was meeting minutes were out just seconds ago, actually about 7 minutes ago. Not a lot of market reaction so far. It looks like most of the people in the FOMC, the voting members, are in lockstep, at least according to the minutes right now, which is they're debating between 2 and 3 rate hikes this year. So we'll see how that goes on. It looks like the next rate hike would be in February from reading the tea leaves and the Fed futures. So we'll have to see on that how that goes. But as somebody in the den said, still saying that they are data dependent and not a whole lot going on here. Lock what? All right, engineer is just throwing things at me. Anyway, what else do we have going on? Yeah, that's kind of it at the moment. We'll get moving here with a little bit of history. We'll talk a little bit more. It looked to me as the market was kind of waiting for this FOMC announcement to come out. We've had about 150 million shares in the last 7 minutes, which is pretty good compared to the earlier part of the day. And it really looked like they were kind of waiting to make sure that there was nothing going on. But volume picking up back now, 2.15 billion shares. We're up 10 points on the S&P cash. This has been where volume has kind of come out. It's kind of the high end of the range. If you listened to my show yesterday, I expect that we're kind of going to bounce around in here. I'm not expecting much lower. Could we drift up and hit 20,000 on the Dow? I think we could. But I don't think there's a whole lot other than us drifting up maybe just a little bit through and to the heart of earnings, which is later this month. But we're going to start seeing some earnings trickle out, in fact, tomorrow. But I don't think those are going to be market moving. I think we are going to have market moving earnings, though, to a small extent next week. And the last week, the 20th through the 30th, I think that there's a ton of stuff out there that could severely move the market based on how these folks state that their earnings were affected by the dollar, which we have to talk about also. But in the meantime, we need to get this party started.
Then it's all just a little bit of history repeating.
It is history repeating on this day in 1999. For the first time since Charlemagne's reign in the 9th century, Europe is united with a common currency when the euro debuts as a financial unit in corporate and investment markets. 11 European Union nations, Austria, Belgium, Finland, France, Germany, Ireland, Italy, and Luxembourg, the Netherlands, Portugal, and Spain, representing some 290 million people, launches the currency in the hopes of increasing European integration and economic growth. The problem was that each one of them had their own elected body, and they all started pretty quickly cheating, some worse than others. The euro was established in 1992, by the Treaty on European Union, which spelled out specific economic requirements, including a high degree of price stability, low inflation, before they could join. Of course, we know from Italy and Greece that they weren't pushing anybody out. And those countries have been a big drain on them. They would have been much better off to start with a few nations and build it up based on countries actually complying. And they needed a carrot and a stick for countries that were acting badly fiscally. And, of course, all they had was a carrot, no stick. And those countries pretty much figured out all they had to do was whine and moan, and eventually the EU would throw a bunch of cash back at them, hoping that eventually everything would just turn around, just betting on the come. Well, it never came, and my guess is in the next 2 to 4 years, we'll see the total disintegration of the euro. What's going on outside of that? I think I talked about this in November, but we'll bring it back up, and that is I couldn't see being short Boeing. That was because their new 737 MAX 8 airplanes are incredibly fuel efficient. A lot of these planes, now that they are on the road, and they got a few out in the marketplace, this may make, in certain areas, less and sub $100 flights from the East Coast to London, and maybe $125 to Paris one way. So you may be able to, with fees and everything, travel back and forth to Paris from maybe somewhere in North Carolina, maybe in Massachusetts, a couple other places. What the idea is for many of these airlines is to buy these smaller planes and have more routes available, so everybody didn't have to fly out of JFK and everybody didn't have to fly out of Logan. They're going to try to make sure that any airport on the East Coast would be reachable by these planes. They're going to be about 15% more fuel efficient, and not only that, the way that they've structured these out, they'll be able to put a lot more bodies on these planes. So you may feel like a sardine for the 7 hours that you're in that seat, but it will be a very cheap seat, at least what most people are doing. Anyway, Boeing and GE Capital Services are basically setting up an order for 75 of these 737 MAX 8 airplanes, and that means that these will eventually be going to some airline, but they've already booked the deal. It's valued at $8.25 billion at current list prices. Penny here, billion there. Soon you're talking about real money. But I know a lot of people that think Boeing is going lower, but I've never understood the idea of shorting a company that has the absolute best product in the world. And I don't know what else to say about that. I may not be long it, but I certainly would be short Boeing. Much better lower hanging fruit out there. We'll be back after this.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're 2270.88 on the S&P cash volume, kind of a little drifting off here a little bit. 2.22 billion shares. I was thinking we might get a little bit more out here today, but, I kind of think that we're kind of range bound. I expect that when the Dow does hit 20,000 or not, that we'll probably hear, some screaming. A lot of people will probably want to short this, short the Dow at that 20,000 level. So, we're kind of probably going to do some back and fill. Everybody's going to start feeling out how the traders are going this year. So I'm not expecting that much. I'm actually kind of surprised that we're up a little bit as much as we are. I was actually hoping for a little bit of a pullback so I could buy some additional positions. But I think maybe we just kind of stumble around up here. Maybe we go a little higher, but I don't see anything that's really going to move us in the next couple of days. The FOMC meeting notes were probably as close as we were going to get. Before the bell tomorrow, we've got Constellation Brands and Monsanto. Monsanto's been in a kind of a buyout hover for a while. I have no idea. I always thought it was the most ridiculous buyout of all time, since the company Bayer trying to buy them literally could not own them legally in their own country. I don't know what the whole thing is, but for most of the countries over there have very violent policies toward genetically modified food. I just didn't understand the whole idea of a company based in a country that was basically illegal for most of the stuff that Monsanto does to do anything. Anyway, we'll see. Probably have some clarity in the morning on Monsanto. I can't imagine that they'll be able to avoid all this anytime soon. After the bell tomorrow, we've got the Container Store, the pretty much troubled IPO from a year or so ago, where they've never really done that well. But everybody kind of likes their stores. I don't know if the earnings are all that much, but we'll continue. Anyway, that's kind of it for doing that. We're going to look at some other stocks. Our first comes in via email. In fact, you can be just like Rose, who wanted to look at Twillo, TWLO. And I looked at this before. It's not a bad looking chart out here for a potential bottom. Let's take a little bit longer look at this thing. You had your sign of strength, and this stock actually took off going back on, what is this, June 28th of 2016. We've made it all the way back there. Volume at that time was 10.6 million shares. We came in to those candles on 6.3 million shares on November 8th, 3.8 on December 12th. You did have an acceleration of volume, though, yesterday, and that is telling me that why you still have a lighter volume than that gap. It is so close that I wouldn't want to. You basically had it negated yesterday because you wanted to see all that volume kind of come in. You know, you had 13.7 million shares on the 29th of June last year. So you're kind of coming back with lighter volume out here. I just don't like to see this lighter volume. The energy on the December 22nd high too was pretty brisk. But would I short it? No. Would I wait for this thing to go sideways and maybe burn some of this energy off? I would say that would be the prudent thing. You may need a month or two for this thing going sideways. There are some stocks out here where these last legs coming back did so on incredibly light volume and also had volume testing, something like this, like previous gap up or sign of strength on a whole lot less volume. So did not like yesterday, kind of really put some flies in the ointment for Twillo. Okay, what else do we have out here? Again, you can be like Rose and email me at path@tfnn.com. You can also call me at 877-927-6648, and you can put a message in the den. Okay, what do you think? What do you think? SRPT. SRPT. Is this Sripa Pharmaceutics? Let's see. SRPT. Okay. Focuses on the discovery and development of RNA-based therapeutics for treatment of rare infectious and other diseases. So this is not DNA. This is RNA. That's interesting. The company lead product is a bunch of words I can't pronounce in phase 3 clinical trials. Okay, so you're pretty much all or nothing on this thing. Doesn't look like they have a lot other than this muscular dystrophy drug. I haven't read enough about it. They had an Ebola drug, but I don't know if that's gone very far. I'm just reading a few more things about them. Founded in 1980, Cambridge, Massachusetts. Well, you have to like the chart. This is exactly what you look for in a sign of strength. That was the day this took off on September 19th, 2016. Did so with a monstrous sign of strength. To do is turn this off so we can get a little bigger pattern out here. Today's kind of up. I mean, if you were going to buy this thing, this is exactly where you were going to buy it. That's what I said. There are so many of these other stocks out here that look and have much better patterns that have come back to their takeoff points with lighter volume. You've kind of come back fairly significantly, though. And again, you're probably going to get a bounce out of this one. You might get up to 35 bucks. So not bad if you bought it at 26.66, the low. Yeah, it could be a nice little run. You'd probably look for this thing to consolidate between this low of 26.66 that we had 2 days ago and about 35 bucks. But my guess is that's going to have to go sideways for a little while. And then you're probably going to have, if it consolidates well, then you could move your way back up and test. You've got some nice room on this one. I do understand what you're looking at in this chart, and it gets the Dave seal of approval. I'm just not sure how long you would have to sit on this one as it goes sideways. So, okay. See what else we have going on out here. 2270 on the S&P cash. We're going to look at some of the stocks for the decliners out here today. IDEX, IDXX is the symbol on this one. Kind of came off today with volume and a sign of strength, a sign of weakness, actually. Gotten a lot of that back. Could have been a lot worse. It was down to 113.92. We'll look at a few more when we return.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we have another email saying in the news today, we're talking about healthcare once again, and how is that going to affect maybe these healthcare stocks going forward. First of all, I have to introduce a new theme song. We have theme songs for many things going on here at TFNN when it intersects with the stock market. But this one will be a theme song for a new president. Well, we have the tweeter in chief coming here in a mere 16 days. And one of the things that looks like it will be happening is that they are expecting, at least from the news today, a new bill on the desk February 20th to repeal and replace Obamacare. My guess from reading the news so far and understanding the motivations of one new president will be that they will, I think, are going to go free market. So you could probably look at healthcare companies being able to sell their healthcare plans across state borders. So instead of having 50 different plans for every single state, because you can't sell across state lines, which seems almost ludicrous, that's going to change. I don't know the healthcare market that well to tell, but it certainly looks like that is going to be the big thing. They're going to go for free market opportunities to make changes. And, I would have to say that the current plan and the idea to get these guys in was based on a plan where they would run out most of the competition and you could raise your prices. And that's why we see the healthcare costs skyrocketing over the last 4 years of these new plans that was supposed to actually make them affordable, almost Orwellian in nature. I don't see that, but we only have that short to go. February 20th, that would make me think that they already have a fairly good idea what's going on, and anything that would happen that quick probably doesn't have a lot of details to it. So interstate commerce, allowing sales of insurance companies to sell medical health care across state lines is probably their fix for the short term. But I don't know how that I could see on one hand how it would give a lot of the bigger companies that have the ability to pounce instantly and move instantly and quickly as the old plan goes out of effect, and basically you go back to the way it was before, other than selling across state lines. So I don't know. Volume is 2.33 billion shares. Let's see. What else do we have? We were looking at some stocks out here, the big percentage movers, at least of the day. Most of these continue to have the reversal pattern in energy. We have Marathon Corporation. It was down, a fairly bearish-looking candle, but not so much bearish volume. Watch how that actually comes out today. TSO is another one down. You would have liked to have seen a lot more energy out here if you were going to think that $50 was going to break in crude. My guess is you're going to get yet another bounce. We might pull back a little bit more. But if you were bearish, you would probably want another bounce and then more energy than we're having today. Tresso, another one of these energy stocks, 1.9 million shares. You had the last major low out here had 3.8 million shares on November 30th. And even the last major high had 3 million shares. So 1.9 million shares is not a huge vote. Of course, any of the volatility stocks gapped down again this morning and have continued down most of the day. Again, not a lot of volume in these either. So kind of tracking with the bigger theme of stocks like that. Valero really didn't roll as badly as it could have yesterday. Really getting more of that today. In fact, this one is starting to pick up and has more volume than it did yesterday. So it looks like maybe the refiners out here, a little bit different story, at least on Valero. But volume, and you've got a high volume low out here at $60.35. So you may have something to shoot for in that one. I would still think that you get maybe kind of a little cup out here and then a general failure if you wanted to go bearish on crude. So I'm not recommending it at this time. VXX, another one down. Again, volume is not as strong as you would think in some of these getting washed out, but just never really saw the opportunity out here to be short or be long volatility until we get maybe more closer into earnings. Again, I don't think anything's going to happen before the 15th of the month of significance. I could be wrong, but that is my game plan for the moment. Another one down fairly significantly today. Tried to rally, but couldn't get any legs early in the day, which is Western Refining. Not a lot of volume on that one either. That I think if there's a theme in energy today, it is that these reversals are having some lighter volume. Doesn't mean they'll get back up to the highs, but does mean that you could go sideways or maybe a little bit of a retrace over the next couple of days. Since we do have a shortened work week, tomorrow at 11 o'clock, normally 10:30 on Wednesdays, is the EIA numbers. I think the API numbers are supposed to come out at 4:45 tonight. So I'll have a little heads up tonight. Maybe Tom will talk about those API numbers in his show in the 4 o'clock hour. But I think it's 4:30 or 4:45. Those API numbers come out, which are the independent numbers. And then, of course, the government numbers, which seem to weigh the day, mostly because they come during the trading day, I have a feeling. But those are at 11 a.m. tomorrow. So make sure that you don't jump the gun and think that they're coming at 10:30. Other stocks of interest, and again, you can always email me at path@tfnn.com. Call me at 877-927-6648 or post a message in the den. They have free healthcare in Canada. Everybody keeps telling me that, and no one remembers that I worked for a Canadian company for some 15 years, 12 years, 13 years, whatever it was. And I flew up there every 2 weeks. And every single one of my partners, all 5 of them, all had medical insurance in the United States because if they wanted medical care, they knew that they would have to go right across into what was it? No, I want to say Windsor to get it. And and in fact, one of my partners, Keith, had a heart attack and flew down to Cincinnati, where I live, to get his heart operation because he would have had to wait 6 months. I know everything that there is to know about what everybody wants to tell me about healthcare. So don't try to, you can't snow the snowman. You know that already. We'll be back after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Oh, boy. We've opened a can of worms here. But I will state my favorite quote of all time, and that is, if you think healthcare is expensive, just wait until it's free. What do we have going on here? We have a caller, and that is John from Sarasota, CVOD.
Yes, Mark.
How
I
you
was
doing, John?
wanting to get your thoughts on VOD.
Oh, is it VOD or COVD?
It's V as in Victor OD.
Okay.
Yeah,
Good
it
enough.
looks like an
Well,
opportune moment to buy some stock. I was wondering what you thought.
well, you're just testing the previous high on half the volume today. What do you think that sounds like?
You said previous high?
Yeah, 25.62 on December 13th. Came in with 9.63 million shares, right? Vodafone, right?
Right.
Yeah, I'm showing it about 5 million shares right now. Its high was about, what, 7-8 cents less than that December 13th high?
I'm looking at let me see, a weekly chart here, and it's like low is 52-week low is 24.17.
Yeah. Let's look at the December 13th high, $25.62. That day
Right.
had 9.63 million shares.
Okay.
Today you're going into that with 5 million shares.
It's not as many shares, is it?
It's not as many shares. Now, that is just one part of it. But I kind of like having all the parts together. You had a good energy and a good sign of strength. You had good volume up yesterday. You basically have your second gap up today. Could you get a third gap out of this? I think you could. Now, you got a good sign of strength, but, you know, you would have liked to see another thing out here that I kind of dislike about this. The December 1st low was at $24.17, had 8.67 million shares. You got in with, 15 cents of that low on December 28th, and which should have been a kind of a light volume day, right? End of the year, all that stuff. And you had 8.33 million shares. So this thing only came in about 300,000 shares on one of the lightest trading days of the year as it got back into that candle. That would suggest you're going to get one more test of it. What is nice here, though, and one thing that you would want to look at is the possibility that does pull back to the $24.33 And this time, it does it on very light volume. And if you did that, if this thing came back into that $24 area on about 5 million shares, I think it would be a tremendous buy. But this is, you had sign of strength here off this December 28th low, right? And you had a couple of nice days. This is the sign that there is a possible bull market in a stock happening, or there's something bullish about it, right? Now what happens is you get this movement, and then the very, very nice light volume retrace. Everybody lose interest out there, but no one's really excited to sell it. And those are the ones that I like to buy. But, you know, that is the retrace to the lows on lighter volume. But right now you've got lighter volume at the highs. You have basically untested lows in this $24 range. So that is the setup. Doesn't mean that it won't go higher. But
I was hoping it would get up into the 30s and 40s as it did back in 2014.
I think you've got a pretty nice setup. I think you're just one cycle too soon, maybe. If this would come back down, like I said, in that $24 range, and you get about 4 or 5 million shares, it's not, I don't think you're wrong. You just may have to sit on your hands for a long time for this to play out. But
Got
you would
nice
have to
dividend.
Huh?
It's got a decent dividend.
You know, you don't want this thing closing below $24.33. If you wanted to take that kind of heat, I think it would be interesting. You know when earnings are on this?
No, I don't. Let's see.
Okay, I'm looking it up here. May 16th, so you got a while.
Yeah.
So it's not an earnings deal. So
I guess I just need to keep my eye on it then, huh?
I'm telling you, this is a fairly decent setup. And I'll tell you the story. Every stock tells a story, right?
Right.
And this one starts, I think, in September 1st, where you get kind of a rally. Richard Wyckoff called it a automatic rally. That's one without any preparation, one that really no one knows anything. It just kind of happens. And then what he would like to do was buy light volume retraces. Well, you went from that December 1st low up to the December 13th high. You did so. Energy was okay. You came back on a little lighter volume and energy back down to the December 28th low, but you really didn't see the kind of light volume that you would have liked to see. Now you went up and you've got a sign of strength, but you get back up to the previous high and all the volume falls out. So now what you want to do is see this come back down one more time, and that 4 or 5 million shares down $24 means that you now have some tremendous risk reward instead of kind of average risk reward, maybe even buying it sub 25.
I see.
So to me, it's more of a setup issue than saying it's not going higher. Yeah, you may even get one more gap out of this thing. Could it get up to $26.50? There's a nice gap. It wouldn't surprise me if it did. But a buck higher for maybe a buck lower doesn't give me a great risk reward.
Okay.
But you've got that high volume down day, right, on the 10th of November. And that is really what's setting up the high side of that equation, right?
Right.
You may bounce around between this 24.33 and 26.50 for a while until it consolidates out and decides to start running higher. But again, I'd much rather be in a $24.50 to $26.50 trading range, buying at $24.50 than buying at $25.50 and have a buck up and a buck down.
I see.
You
Makes
get
a lot
my
of sense.
drift?
Yes, I do. Yes, I do.
I mean, maybe you could set it up where you had in that low 24s, had a 50-cent stop to the downside if it closed below it,
right,
and $2 above it. That'd give you a 4-to-1 ratio, and that one I would kind of like.
All right, Mark, I appreciate your insights.
Just a thought. Anyway,
Thank you,
you bet. Thanks, John. You can be like John from Sarasota and call me at 877-927-6648. What else do you have? Lots of discussion in the VIN. See if we have anything more out here. Okay, what else is going on? Well, we went through those, and we're going to break. We got one more segment out here. We'll look at the percent advancers today here before we close up the day. Again, market's just starting to get fired back up once again out here in 2270, up 12 points on the S&P cash, 2.46 billion shares on the NYSE.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And the big winners on the day, Acadia Pharmaceuticals. This one was hanging out right above the or at the November 10th high, $30.23. That had 4 million shares. You threw that today with 5.5 million shares. So that's kind of the ones that we, I think those are kind of the ones we need. But it's a nice pop out here. Good sign of strength. You got kind of volume. You had kind of a nice sign of strength already on the 20th with ACAD already, but a little continuation of that. That opens up $36.59, which is the what is that? The September 21st high. What else do we have out here? Chemours, no big deal up there. Little pop, EXAS. This one is a nice pattern. And again, what we've talked about, which is these low volume, light energy retraces back into previous signs of strength. And that's what we have in this one. EXAS had a wonderful sign of strength back in July on the 26th. Did so, popped with 30 million shares on that day. It went to 2280. It's worked its way all the way back to this original point. It pretty much filled all the gap on it. Yesterday, less than 2 million shares into that gap with 29 million shares. What do you think you're going to get? Richard, what is it? Richard B. Wyckoff? Richard D. Wyckoff. Never can remember. But he set up these patterns, 1910 or 1920, which is look for a sign of strength, wait for it to pull back all the way, and then get in. But this one, pretty sweet deal out here when you're testing stuff on less than 5% of volume. Pretty nice setup out here in Exact Sciences. What else do we see out here? FGP, nice little pop in that one. HLT, something that must be going on in there that I don't know about. What else is out here? The biotechs kind of look good. I was thinking that I was hoping, let me put it that way, that I was going to get a pullback in the IBB to about 265. Doesn't look like I'm going to get it. You basically filled this gap up from the 9th of November that came with a very good volume of almost 10 million shares. You basically, in the last couple of days, were hitting that with about 3 million shares or less. And that basically set that sign of strength up as support. You have a nice move up here today in LABU, and we'll go take a look at the IBB also. These things have a little bit different contents, but candles tend to look the same. Volume picking up a little bit, not as much as you would like, but again, kind of a light day already out here for most of us. And we'll see NVTA. Yeah, nice move. That's just more of a continuation in that one. The LTA, a little bounce. Tenet Healthcare. Again, our conversation at the beginning of the day, I'm not exactly sure how these healthcare stocks are going to react on first, because I don't know enough about how they work internally. On first blush, you would think that the bigger companies would have a better ability to react quicker to changes in government policy. So I would look at these. Now, volume's not too bad. Nice pop up on this one. The November 18th high at $17.66 is kind of interesting. You're at about that same volume today so far. So you want to see how this thing closes. But you're going to run into a lot of resistance in this one on just a few dollars higher also. But let's see how these things work out in the next couple of days. In the meantime, sell when you can, not when you have to. And we'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.